Watching your highly lucrative global tech startup stock options finally vest after years of grueling executive labor feels like the ultimate financial victory that will perfectly fund your family's luxurious new life in Norway, until the Norwegian tax authorities suddenly classify your entire equity payout as standard daily wages, aggressively confiscating nearly half of your hard-earned wealth until simultaneously hitting your foreign corporate headquarters with a massive, unexpected payroll penalty. Welcome to Norway Perspectives. I am Erik Christensen from the NLS Norway Relocation Group, and today we are exposing the devastating executive equity trap governed by Norway's fiercely strict taxation rules on employee shares, known locally as Opsjonsbeskatning, and why cashing out your international stock options without aggressive cross-border structuring will completely destroy your executive net worth. For highly successful corporate directors and elite technology executives arriving from major financial hubs like Silicon Valley, Austin, London, stock options and restricted stock units, RSUs, form the massive lucrative core of your overall compensation package. In many common law jurisdictions, when you exercise these options and sell the shares, the resulting profit is usually treated as a capital gain, meaning it is taxed at a highly favorable, significantly lower rate designed specifically to encourage long-term corporate investment. You naturally assume that because you earned these options years ago in your home country, you can simply exercise them while sitting in your new Norwegian home and enjoy those same low capital gains taxes. Norway operates under a drastically different, heavily, aggressively redistributional tax framework that actively despises the concept of tax-advantaged executive compensation. The massive financial trap triggers violently because the Norwegian Tax Administration, known as Skatteetaten, absolutely refuses to classify the exercise of employee stock options as a capital gain. Under strict Norwegian tax law, the financial difference between what you pay for the stock and its actual market value on the exact day you exercise the option is legally classified as standard employment income, known as Arbeidsinntekt. The devastating reality hits the moment you click exercise in your global brokerage account, because this massive windfall is legally treated exactly like a standard monthly paycheck. It is forcefully dumped into the Norwegian progressive tax system. You will not pay a 22% capital gains rate. Your equity will be aggressively taxed at the absolute maximum marginal income tax rate, which rapidly pushes toward a catastrophic 47%. If you exercise $1 million worth of global equity, the Norwegian state will legally seize nearly $500,000 before the cash ever reaches your personal bank account. The nightmare escalates into an absolute corporate compliance catastrophe when your foreign employer gets dragged into the Nordic tax net. Because Skatteetaten classifies your option exercise as standard Norwegian salary, your international parent company is legally forced to pay Norway's aggressive employer payroll tax, known as Arbeidsgiveravgift. The moment you exercise your equity, your foreign human resources department is suddenly slammed with a legally binding demand from the Norwegian government to pay an additional 14.1% tax on the entire total value of your financial gain. If your global employer did not budget for this massive Nordic penalty, it will severely blow up the corporate ledger, trigger emergency internal compliance audits, and paint you as a massive financial liability to the International Board of Directors. Furthermore, the bureaucratic nightmare of international apportionment will completely paralyze your finances if you handle with absolute legal precision. If you are granted a 4-year vesting schedule while living in the United States and you move to Norway for the final year of that schedule, Skatteetaten will often aggressively attempt to tax the entire 4 years of growth simply because you are a tax resident on the day of exercise. To prevent this catastrophic double taxation, you must proactively weaponize international OECD tax treaties to force the Norwegian government to legally apportion the gain, strictly isolating their taxing rights only to the exact number of the days you physically worked on Nordic soil. Navigating this hyper-complex intersection of international equity compensation and aggressively Norwegian taxation requires absolute strategic dominance and guaranteed financial structuring long before your options ever vest. At NLS Norway Relocation Group, we ensure your lucrative executive equity is never cannibalized by the Norwegian state. We handle your entire cross-border financial transition through our highly exclusive, trusted network of elite Norwegian tax attorneys, corporate compliance experts, and wealth strategists. Rigorously audit your global equity packages, aggressively enforce international tax treaties to legally shield your pre-arrival vesting periods from Norwegian taxation, precisely optimize the timing of your equity execution, and proactively coordinate with your foreign corporate headquarters to completely neutralize the Arbeidsgiveravgift payroll shock. We build an impenetrable legal fortress around your executive compensation so you can confidently build your Norwegian wealth. Do not let a misunderstood equity classification trigger a catastrophic financial bleed that destroys your global net worth. Protect your international stock options and ensure your executive transition into the Nordics is a total financial triumph by visiting our website at nlsnorwayrelocation.no, nlsnorwayrelocation.no, to book a comprehensive strategy session today, and I will see you in the next episode.